Welcome back to Investing and Trading Live. My name is Josh Lilquist, and we are having some fun talking about the do's and the don'ts of the financial markets, stock, options, futures, Forex, income strategies, and long term wealth strategies. Our sponsor, Online Trading Academy, 25 years teaching people just like you how to trade and invest and how to get started with the financial markets. We see people that are brand new that want to learn more how to get started. We also see people that have been trading and investing for several years, sometimes 10, 20, 30 years, and looking for more consistency. And we have investing classes to introduce you to those consistent strategies that are out there. Text the word investing to the number 210 for 2 free tickets for one of these investing classes to see what you can do differently. Text investing to the number 210 right now. So, Al, in that last segment, you were talking a lot about and explaining why it's so important to have a trading and investing plan in the financial markets. There's reasons why you get in the markets. Why is that? But also, what is the strategies to do that? But have a leading way to get in the markets, not lagging indicators that are all out there. So, which kind of gets into what's happening in the markets right now, Al. I think you mentioned in the first or the second segment about what happened in 2000, 2008. There was both roughly around a 50% drop in the market.
Correct.
And the S&P 500 is down roughly about 20% right now, 20 to 24%. And you mentioned that a 50% drop would bring it down to the lows from 2020 from the corona drop, which is definitely possible. So that's why it's so important to prepare now based on what the market is kind of showing right now. The markets are showing weakness. There is turmoil everywhere. Europe, China, there's things going on everywhere. Inflation, and you have to prepare if you're nearing retirement. If you're retired now and you're losing in those 401ks, you might be going back to work. So I'm going to ask you this question. Do you think people that are either nearing retirement or that are retirement, do you think they really are worried? Is there studies out there? Is like, what are people thinking mentally with these markets?
Yeah, there are a number of studies that discuss this, and almost all of them are less than stellar as far as is what the retirees are looking at for themselves in retirement. There was one in particular that I had read just recently from a company called F&G. It's a Des Moines-based life insurance annuity company. They found that 4 out of 5 Americans that are over 50 say they're worried about inflation. When you look at the pre-retirees, people that haven't gone into retirement yet, 84% of them are worried about inflation and the increase in healthcare costs. These people are not worried about having enough money to do additional trips or take cruises or anything. They're worried about just paying their day-to-day expenses. And a lot of them feel, as much as 64% of them feel that they may have to work in retirement. And at the very least, according to this study, what people need to do is to revisit their retirement plans and then consider a more holistic set of products that can guarantee income, help protect against market volatility and inflation. What does that sound like? It sounds like what we teach our students. We have a retirement strategy that really incorporates 3 basic things that are really important. Number one is having an income part of your retirement savings, generating income, in other words, how to continue to grow your assets. Don't just start drawing down what you have, but grow those assets so maybe you have something left over for a legacy. And then also protection, because what a lot of people are feeling right now is the impact of this big market drawdown we've had, which, as you just mentioned, may not be the end. If we go down 50% or 57% like we did in 2000 and 2008, that means we've got more downside to come. Does that mean that's guaranteed? No, it doesn't. But here's what I'm going to say. People that adapt and learn strategies from multiple market directions, those are going to be the winners, regardless of what the market and the economy is doing. What we have found, Josh, is that not only are people concerned about inflation, they're concerned about the increase in healthcare costs. This is a number that's pretty scary. A person that's 55 or a couple that's 55 that has 10 years to go before retirement at 65, they could be looking at as much as $267,000 in additional medical costs.
Hmm.
That's huge, and that's one of the things that people really haven't prepared for. So when you go into retirement, it doesn't mean that you stop paying attention to your investments. It doesn't mean you stop paying attention to what you have coming in from whatever source it is. It may mean that this is as important, if not a more important time, to learn how to take control of your assets, learn the strategies that you can use. A lot of people right now are saying cash is king. Maybe we'll just go to cash. Well, if you do that and you're not participating in the potential market moves, you may not be growing your assets enough to really get you through maybe 20, 30, 40 years of retirement. So the great thing with what we teach our students, especially the assets that we initially are going to teach you for income, is that you can have that big cash position. Make yourself protected, have yourself sleep at night, but you also can have a small amount of money into an account using a leveraged asset that gives you the opportunity to control a much larger investment with a much smaller upfront investment.
Yeah, and you really dissect a lot of this in that investing class. These investing classes that people have been texting into. By the way, congratulations to all the people that have been texting in for this class. It really helps people get started with these different strategies that Al is talking about, to be introduced to what those are, what you might be able to do, especially in those retirement accounts. Text with the word investing right now. So text investing to the number 210 for tickets for this investing class for you and a friend. Al, we're just kind of thinking as you were talking about there, and it's going to be. I hope people understand the way I explain this. So let's just say, the markets they're down 25%, and I think we talked about in the first segment. If somebody had $100,000, they most likely have lost $25,000 if the S&P is down 25%. No, that's a lot of money to some people. That's not a lot of money to some people, but 25% is actually a lot. If it goes down to 50%, they are down 50,000. So let's just say what's the possibilities to protect your position? So let's just say right now someone does some analysis and they say, you know what, I feel this market is going to go down 50%. There's an opportunity to just close your positions, keep
Right.
what you have, because if you can't keep it, you can't earn it, right? And let's just say somebody knew how to get back in close to the right time. So rather than losing 50%, they only lost 20% and had the potential to get back in at a lower cost base and then ride the market as it goes up. So it's a kind of a concept people don't really understand. But there's also something I haven't explained yet: shorting. Let's just say somebody knew how to short the market as this market's going down. There's a potential another 25% in this example, if that's what happens, to profit there. So there's strategies that are designed for that. We haven't really explained what shorting is, Al. We've talked about it a lot on the segment here today. We got about a minute to explain shorting. Make it simple for our listeners so they can come see in this investing class what it's all about.
Well, we know the markets go up and we know the markets come down. Most people only participate or have the potential to participate if it's going up. They buy something and they hope it goes up. What if it goes down? What if the market goes down another 20 or 30%? Are you going to be okay just sitting there watching your assets be taken away from you, or would you like to participate? Shorting is a way of participating in a down market. We teach you how to do that in these classes. There's three different ways that we teach our students how to, easily participate in a down market. The technical way of shorting, which basically is selling something at a high price, buying it back at a low price.
Essentially opening high and closing low.
Exactly the opposite of what you would typically do.
Mm-hmm.
And then there's also an option position that you can use that will go up as the underlying asset goes down. There are what we call exchange traded funds. There's an inverse exchange traded fund that goes the opposite of the underlying. So you can't short in a retirement account, but you can use these other strategies that I mentioned. You can use the option strategy. You can use the inverse ETFs. You could sell things. You could sell a futures contract. There are ways of participating in a down market. And if you're missing out on those, you're missing out on probably 50% of the opportunities that are presented to you on a regular basis.
Yep. If you feel you are missing out on opportunities, and sometimes it's that FOMO, missing out, and the real definition of poor is passing over opportunities regularly. We have an opportunity for people right now to learn about that shorting concept. Text the word investing for 2 tickets for an investing class at one of our academies. Text the word investing to the number 210 210. That's text investing to the number 210 210 right now for 2 free tickets. Al, every single week we talk a lot about different strategies this week, a lot about some new concepts and the psychology of trading and investing. Let's hear today's OTA tip of the week.
Well, now's a good time to ask yourself that how are things going for you financially? Are you where you thought you would be or where you would want to be at this point in time? Is your plan just to continue thinking about it, or is your plan to do something about it? If your plan isn't being implemented because you don't know what to do you need to change things? Well, what if there was a way to help you achieve both short-term income and long-term wealth goals? Wouldn't it be worth taking the action to get that help? And wouldn't it be worth pursuing now? At OTA, at the Online Trading Academy, our goal is to empower people to achieve their goals and their aspirations. It doesn't take courage to do nothing and stay where you are. It takes courage to make a change, a change needed to make new choices, and those choices can help you have the potential to achieve your financial future, your financial goals.
I like that. It all starts with a plan and some action. Text the word investing to the number 210 210 for 2 tickets. We also have this 3-day deep dive. We have a lot of listeners that have been calling in for this, Al. And if you already know that you want to get in the markets and get started, you can call 888-682-6466 for a 3-day deep dive into the financial markets. There is a tuition. It's normally $200. Today for you listeners, it's $99. As always, same time, same place next week. Until then, retire young, my friends.